Hey everybody, Boris, BK Forex. Welcome to Weekly Technicals for November 19th, November 23rd, 2018. For the commodity dollars, for Aussie dollar, dollar CAD, and Kiwi dollar. And this week, commodity dollars really take center stage. What a move today as we close out the week in the combo, especially the high yielders with Aussie and Kiwi leading the way. We've been talking for the last couple of weeks about how both Aussie and Kiwi have been making very long, very steady, rounded out W bottoms. And this was the week where it really proved to be true that they are ready to break out to the upside. Now, there were two very positive developments as the week came to a close. First, murmurings from the Trump administration that perhaps they're not going to go full 25% tariffs with China. Obviously, very positive on the trade front for both Aussie and Kiwi, but also murmurings from the Fed that they may not hike rates. Now, for high yielders like Aussie and Kiwi, which have been trading essentially on yield differentials for the longest time ever, this was double good news. And you saw major moves in both Aussie and Kiwi as the day developed. So we've really moved our levels by the close of the week to the higher end, with Aussie now 74.72 in the range. Dollar CAD pretty much staying the same, 32.30, and Kiwi now moving all the way through almost up to the 69s, and now looking at 70 as a possible resistance. Just a few weeks ago, we were 5 pennies lower at 64.50. That's a tremendous move for a Kiwi, and I think a testament to the fact that low yield, high yield trade is really starting to pick up steam. So the calendar this week, pretty much non-existent. There is a little bit of calm dollar news. We have the PPI data. This is actually interesting because Kathy's bullish. The PPI data. This only lends more credibility to a move in Kiwi higher as we go forward. Then as we move over, there's really nothing for this whole week except for Canada with retail sales and consumer price index. We'll have to take a look. We don't have a call on where the retail sales are, but there has been a little bit of a slowdown in Canadian economy, so it could continue to weigh on the loonie as we go forward. When you look at the charts here, let's actually start with the loonie, which was, ironically enough, the least interesting of all the pairs this week. So here's the loonie. The one thing that was definitely turned out to be true. I said last week 32 was going to be a big resist point, and it certainly was. It was a great point to fade the trade, with like a 32.50, 3,300 really would have been the stop here as a proper stop. So we ran all the way up. I think the highs were 32.60, right? So it just basically ran through, but held, did not run a spill over to the 33s, and then came right back down. Having said this, though, dollar CAD still very much in a clean, positive uptrend. And if the dollar rally does return, this could be one of the stronger trades to the upside. I don't have any strong views here because I think fundamentally it's very hard. This is a non-event week. All of North America is effectively dead this week as far as trade flows go. You could have some low liquidity early week movements, but very difficult to predict. There's no real triggers. The thing that was evident this week, or at least that was very evident at the close of the week, is how the Fed has gotten much more dovish. And that was positive for the anti-dollars, but the least of which was the caddy. And the reason why is because if you think about this, the Bank of Canada has been shadowing the Fed. It's kind of been the little brother to the Fed in the sense that it's the only other major central bank that continues to raise rates along with the Fed, but very much in tandem. So if the Fed stops, the thinking in the marketplace is that the Bank of Canada stops. And that, therefore, provides less of an impetus to want to be long loonie, short dollar CAD than anything else. On the other hand, the high yielders were a power move this week, especially today. Look at this move. We took out pretty much the highs here. Not only did we take out the highs, but we closed at the highs, which is very bullish on a structure. We talked about the idea this was a nice strong W bottom. We're now on the cusp, and we certainly have the scope to move to 74 next week, especially if there's more murmurings of a more muted Fed reaction. I think basically everybody's starting to understand that the global economy has slowed down, the U.S. economy has slowed down, and that this monomaniacal move towards hiking rates may not be the most productive thing in the world as the slowdown happens. So if the Fed takes the the foot off the accelerator. That's very positive. Aussie dollar, which is trading on yield differentials, and we could see it move through 74. It's just on momentum alone. Same story on the Kiwi. Kiwi, just even stronger move. Look at this. This is a really beautiful looking move here. On a breakout, we took out all the highs here. 69 is just within reach here. There may be a little bit of some consolidation, but it's not unreasonable to think that we could push all the way out to 70, where there is far, far greater resistance, of course. It's a big, big figure. It's a big resistance point. But from here to there, there's a lot of empty space, and the Kiwi could push, especially if it gets a strong catalyst from the inflation data at the start of the week. So as we open up the week, the two strongest trades on the major block are Kiwi and Aussie, which are now pure momentum, ready to challenge the 70 level in the Kiwi and challenge the 74 level in the Aussie as the week begins. Wish you guys the best of luck and the best of trading. Boris, over now.